Takes us to our talk of the tape. Is more volatility ahead for stocks? Is the worst, in fact, over? Let's welcome in Adam Parker. He's the founder and CEO of Trivariate Research, also a CNBC contributor. It's good to have you here.
Great to be here.
Especially given what's taken place over the last 24 hours. Is the worst over? What was this?
You know, I was just joking around before we got in the air that after things happen, you always hear something, oh, it was a Japanese carry trade. You never hear about it before it happens. You know, I know we talked a couple weeks ago, things that I could get at, the consumer was slowing, financial conditions were tightening a little bit, the probability of the bear case went up. We talked about it last week on the air. So I think some of those things were knowable. I think the earnings season was a little bit worse than people thought. So you could point to some fundamental things, and I think you get a risk management sort of unwind when people get nervous. Is the bottom in? Probably not. Usually when you get this kind of volatility, you get a few more bad days than just this. It happened fast. But I think it's a little bit premature to say I'm back in with 2 feet and I'm excited that the bottom's in. I don't believe that.
Do you think that, you know, this unwinding of the carry trade, which got a lot of attention yesterday, I think has gotten most of the blame for the kind of volatility we saw yesterday? By the way, you ever seen something like yesterday morning where you get the VIX spiking by more than 100%, just like that, up to 65?
Yeah.
There was a lot of fear in this market yesterday.
To me, like, I took a step back. We were talking about it at Trivariate earlier, saying, you know what? I've seen a million growth scares. Come on. Like, it's not my first, I wasn't born yesterday. This is like the 20th growth scare we've seen in the last 20 years. I think the difference was it felt sharper on VIX. It felt sharper on financial conditions, which nosedived. And then you say, well, when did I last get on these metrics? Oh, wait, COVID. It's not great out there right now, but it's definitely not 2008. So I think there was a bit of kernels of truth that are exaggerated. The fundamentals are eroding, but I still think earnings are going to grow in 2025 versus 2024. And so I'm not like panicked. I'm trying to think about what do I like, what can I maybe get that's a little bit cheaper now, and I'm trying to figure out how to get more offensive as opposed to just hitting the panic button.
Goldman CEO David Solomon's on the tape here was giving an interview and said no recession, the correction in the stock market, quote, might be healthy, sees no emergency cut from the Federal Reserve either. And there are many notes out today saying no imminent recession. That's HSBC. Barclays of the jobs report last Friday, which got everybody kind of worked up. Right. Just one print. What do you make of all that?
Yeah, I'm inclined to think that while things are slowing, they're not falling off the cliff. I was a little surprised to see, Jeremy Siegel come on to say we need like 75 bips of emergency cuts and maybe 2 of them. That seemed a little extreme to me based on what I'm seeing from the data. I'm seeing enough corporates that, look, you talk about Uber, like there's enough things that are going okay for big dollar companies, and I'm not seeing, some implosion. I see some eroding in the consumer. We saw it across multiple big verticals, autos, housing, retail, restaurants, to get a little bit more concerned. The sell side estimates for 2025 earnings are too high. They have to come a notch, maybe 2 notches lower, but I don't think it's like hit the panic button and it's like, let's turtle up.
I mean, of those who were sort of calm, cool, and collected, if you will, was Rick Reeder of BlackRock, who joined us yesterday in the midst of all of this, from BlackRock, of course. And he said, look, this presents a pretty good opportunity. I want you to listen to what he said yesterday, and most importantly, what he was doing and looking at.
Part of what makes this an interesting market is there's some stuff to do. I mean, there's some things to trade because the markets are overshooting in a bunch of places. The front end of the yield curve, you look at the move, what was it, over 30 basis points today. I mean, there are opportunities across these markets where you're seeing some extreme moves, and we're taking advantage of some. And by the way, I would say the same thing on the equity market. I mean, some of the names that have reported good earnings and buying back their stock that are down mid to high single digits, there's some opportunities in some of those as well.
That's Rick Reeder. Do you think we'll look back at this and say that was a great buying opportunity yesterday of a lot of different things?
I'm inclined to directionally agree with them that the sell-off's going to present some opportunities. It's just in the past when I see this kind of volatility, it usually has a few big up days like today and then a few more big down days before it's totally over. So I can't say it's the clearing event. I think if there's names you like, you go in, you say, you know what, this is 10, 15, 20% cheaper in some cases. Like semis. I mean, the semis have gotten absolutely annihilated over the last kind of 2-3 weeks, and I don't think their fundamentals are that impaired. So if you're a growth PM, you're looking and you're saying, I wanted to own these names. I mean, Nvidia's down 35%. Things are down a lot from the peak, and maybe the risk reward's getting skewed to the positive on a 3 to 6 month view. So I think you can start looking to buy stuff, maybe covering some shorts if you're a hedge fund. I don't think it's panic button. So I agree with I agree with Mr. Reader's sentiment.